thank you very much, first of all, for the invitation. It's really great to be here. Just want to follow up on what was just said. Indeed, it's quite interesting times we live in. Obviously, views make markets. And in fact, we heard a view whereby you shouldn't be buying Bitcoins, and yet it is growing in value. So there must be a reason for those buying the Bitcoins really to expect it to grow further in value. That's what I'll try to focus on, as to why people do believe and why there may be an objective reason to expect that Bitcoins may indeed grow in value, even or despite the objections of those really not so keen on digital currencies, really not only Bitcoins from here. So with that in mind, I'm just really going to focus on, first of all, what is a digital currency? Presumably, most of you do know what a digital currency is, so I wouldn't spend too much time on that. But then I certainly wanted to look into the economics of digital currency. What does it mean? What makes money money? You know, what does money make? And then taking that as a foundation, really, I just wanted to look into why is Bitcoin growing in value and where do we go from here? And with that said, really just a very brief overview as to what is a digital currency. I guess a defining feature of a digital currency is like it's virtual. It's virtually created and stored. And you have all the other important features. The most important to me is the safety of transactions that are associated not only with Bitcoins, but other digital currencies. We may discuss that, but that is how the creators of Bitcoins are selling them. We are offering you a way to make payments which is safe. Could be said safer than credit card and debit card transactions. And it seems that that is credible for now. And if you wish, and going back to the comparison with fiat currencies, with all the assets of a country effectively backing a particular currency, say like the pound, it is interesting to see that investors were jumping on the opportunity to acquire Bitcoins because they were free, or presumably free of the whims of central banks, free of QE, if you wish. Because in reality, if you think of it, when you buy a fiat currency, that's a liability that the respective central bank, say Bank of England, has printed. They've issued it and you bought it. And they're telling you that, if needs be, they'll give you the money. They're owning you. And the assets of the whole country is backing that up. But is that really the case? When the Fed was selling dollars to you in 2008, did they tell you that they'll print 4 trillion more in the next 5 years? No. And that is, how much is that worth then? I mean, okay, all of a sudden I have to get in line, right? All these people waiting to be paid. So I'll treat that argument with caution. And for a time at least, for the time being, Bitcoins are seen as an alternative to all that, right? A currency that is detached, removed from the whims of politicians, policymakers, central bankers, and all that. Again, I'll come to that and discuss whether that is a credible claim. So what makes a currency? Well, currency serves two purposes. It is means of exchange and it is store of value. As means of exchange, we just use it when we want to buy stuff, right? Otherwise, we end up exchanging goods. So the currency gives you, or money, is serving that particular role. And Bitcoins, or digital currencies, are doing that rather well, especially when it comes to transaction costs and when it comes to safety. That's where they're really good at, presumably. When it comes to store of value, that's another important function. Bitcoins may fare less well. What does it mean? I mean, money has value. It means that we can use money to measure the value of other goods, right? And that value, right, then is being used in the transaction. What is more, you can buy certain currency because you're hoping it will grow in value, so it's becoming a store of wealth. And obviously, that, if you put it into context, if you're dealing with a currency or money that is backed by a certain commodity, like gold, you're also hoping that because there is a limited supply of gold out there, right, there's only so much gold you could mine in South Africa, right, but there is potentially unlimited demand for gold as money, well, its intrinsic value will grow from here. And obviously you have the fiat currencies, whereby the value of that currency is determined by what the central bank is doing with its balance sheet in reality, right? Irrespective of how many assets are being put on the line to back up that liability, it is really up to the central bank what they want to do. And the recent experience has discredited major central banks. So to come back to the store of value argument, it shouldn't be viewed as completely separate from the means of exchange function. After all, you'll be using a currency as a means of exchange only if you believe that it's not going to drop in value. If you look at the German experience, the hyperinflation in the early 20th century, or Zimbabwe, to give a more recent example, right? You won't be using that particular currency to buy and sell stuff because you don't know how much you'll be paying tomorrow or day after tomorrow because it's rapidly losing its value. So those two are interconnected. The thing about Bitcoins, however, and delving into the means of exchange feature of the currency, is that Bitcoin derives its value almost exclusively by the fact that it's offering attractive and safe way of paying, or payment if you wish. And that is also the problem, because digital currencies, they're using a generic code, which could be, I would say easily, maybe not so easy in the near term, but over time, which could be used for the allocation of property rights, which could be used for safely recording the results of an election, for example, which could be used to improve the safety of transactions using dollars, euros, or pounds. Why do I need the Bitcoin there? Or indeed, why indeed do I need a digital currency if I can use that digital code to improve, to enhance the safety of the transaction, right? For the time being, it seems, and if you look at the chart, it's showing you the daily transaction, it's number of transactions, not the volume, overlaid with the price of dollars for one Bitcoin, right? As you can see, there was an initial, quite an increase, if you wish, in late 2013, which was associated quite an increase in the value of Bitcoins. So Bitcoin as a means of exchange is still faring rather well. But I'll come back to that a bit later on. Chances are that its attractiveness, the safety, the presumed safety that digital currencies are offering, right, may be easily replicated before long. So we may well end up having many, many Bitcoins offering the same service. Why should I be choosing that particular currency? And then we come to value. So Bitcoin, or their claim, is that they are so different from the normal fiat currencies because they are detached from, or they're removed from the whims of central banks and politicians. What is more, their claim is that Bitcoin should be seen as gold. Limited supply, potentially unlimited demand. And the way to do that for them is that they have all these miners that effectively are committing to create certain fixed amount of Bitcoins by 2022, which is growing at equal increments every day. That's the gray line in the chart. So that's your supply of money. The blue shaded area is your demand. These are the number of transactions per day. That is how much Bitcoin, effectively how many Bitcoins I need, if you wish. And as you can see, I mean, they do not really fit on the same scale, obviously, but in the middle, we have the price of Bitcoin. That initial surge in demand for Bitcoins, right, fueled an increase in price because supply, it took time for the supply to catch up with demand. Once that was the case, the price of Bitcoin started falling. But if you take that, right, and you extrapolate that pattern for the next, say, future, if you wish, like future years, you think that so long as the creators of Bitcoins could commit to keeping supply stable, limited is the word, and at the same time, you're hoping that demand could increase further from here, then you have an alternative to gold. Right? Effectively, Bitcoin is trying to present itself as, if you wish, the successor of gold, of what used to be the gold's role under the gold standard. Limited supply, potentially unlimited demand, safety of transactions improving and all that. And that's the allure of Bitcoin. Needless to say, as part of the value, we have network externalities. The more people are using the currency, the better, right? You are becoming part of a growing family of users, right? Effectively, more people will be using that. And obviously, it is uniqueness, at least for now. But will that be enough? And I think that maybe you would argue that at least in the near term, there will be people willing to buy Bitcoins, right? You did see here quite a surge in demand for Bitcoin, which fueled that spike in the price, which coincided with quite an increase in the media hits mentioning Bitcoin. Right? There were people who actually believed that Bitcoin is the new gold as means of payment and store of value. Which brings me to the final point, really, is that all sustainable, right? And going back to the two functions of money, means of exchange and store of value, I think that indeed, and we're talking about innovations, Bitcoin may offer an attractive way to improve the safety of existing payment systems. That digital code that is being used, that, if you wish, crypto code, which is used to guarantee the safety of transactions, could be exported, could be used for other assets. It doesn't have to be a digital currency as such. In the near term, however, the likes of, say, if you wish, debt or credit card companies, all these companies that are doing precisely the same electronic payments may come under growing competition from the users of Bitcoin. But that'll be also it, right? Because in essence, the attractiveness of Bitcoin, the attached safety could be replicated. You may have more Bitcoins before you know it. Did you know that we have 200 digital currencies, 30 with market capitalization of above $1 million? And at the same time, it is important to see how the regulators will be viewing digital currencies. Will they be seen as money, or will they be seen as a commodity? An alternative to gold, virtual gold, if you wish, if you believe in that. And then there are different trading rules when it comes to trading, buying and selling Bitcoins. So all that is a limitation for the propagation of digital currencies and indeed, if you wish, Bitcoin in particular. And last but not least, we have the issue we've been always having in the past, the problem of seigniorage. The fact that when you start with a certain fixed supply of Bitcoins, but then you expect that the network of users will grow from here, there is always the temptation to maybe increase that supply a little bit further to get a bit of that price increase already now. Because you never know. Tomorrow, maybe a different day, you may have more competitors joining. Actually, you could see the value being decreased on the back of that. So that problem cannot be solved without there being a legislative framework which is actually leaning against that. We're dealing with a private enterprise that is committing to keeping supply steady, limited over time, and if actually is hoping that demand will pick up from here. That's their promise. But there is no guarantee as such. And most importantly, the value component of Bitcoin associated with the safety of the payment they're providing could be replicated over time. So actually, I would agree that in a sense that Bitcoin, yes, maybe not such a good investment compared to other currencies, but I would certainly think that the features, the added safety of the transaction, really what has been driving demand for Bitcoins could indeed help improve the payment system, the global payment system, and could be applied to existing currencies.